Good morning. I don't have any music playing. I just wanted to do a stream and see if it's something that's possible to run without music at all. Because I've been getting copyright claims to the supposed free music that I've been playing in previous streams. So it would be good to try and find some music, or maybe I have to make it myself. Music that does not get copyright claimed at all. I just need something like that. All right. Um, Monday has come and gone. So the Monday session has now closed on the stock market, the US session, S&P 500. You can see in the last stream we were looking at this level here, this green line, which was resistance here, support here, support here, support here. And we were looking to see if it was going to catch us as support. And it did on Friday afternoon. Now, come Monday, we gapped up, but then all of Monday we spent correcting, and we've actually busted down through that support, and now we're basically trying to hold ground on this support here, these supports. It's an SR level. We had resistance here, support here, and support here. So this is why I've got this other line here. This green line has since been broken, so I'm going to change that to a perforated line. Change its color up a little bit, I think, to make it like that. Okay. So what has that done to crypto? And by the way, we've also lost the channel. The descending channel has actually broken its support out. So that has also kind of departed or been invalidated as an idea, I think. But I'm going to leave it there because this trend line here is still active. Like, you know, it still may have an impact on the price moving forward as price slides down. If it comes down and then bounces somewhere lower and then comes back up, it'd be good to track it to see if it reacts off the bottom of it, or whether we gain access back into the channel like that. And then obviously the top side is still important to have as well as it comes down. If price does come across, to revisit that, we want to see when that happens, when or if. So going across to Bitcoin, you can see we're still in this rectangle. Nothing has changed yet. We were approaching a point of like, you know, balance, if you want to call it balance, like in the middle of the range, you know, the equilibrium basically, and we've been rejected by it. If I just make this line dashed, you can see we were trending up. It was looking optimistic, And then I would suggest that because the stock market did this today, this move down from here all the way down to here, crypto has had a hard time maintaining the efforts it made to get back to the halfway point here. And it has also just followed suit with the stock market and come down, likely looking like it's going to test these lows. Now, we still have our rectangle. At this point, it is still there. We're still approaching the halving, but let's play it by ear. Let's see what happens if we get a test down here, if it's going to hold. If it doesn't hold, then you're looking at a broader correction, I think, as this low will have been lost. This double bottom, arguably, it's like a, I don't know, it's basically just a line of support that is fairly well established as of like about 40 days ago. And that is pretty much where we're at. Unfortunately, I do have to go to work this morning. I have to be there in about an hour, so this stream's going to be a little shorter than usual, or a lot shorter. What's up, buddy? What's up, Captain Crypto? What's up, Peter? Thanks for tuning in, guys. Smash up the like button. But yeah, this is just a quick update. Just wanted to sort of track the progress of this rectangle. I think this triangle, I might dim that down a bit. I don't think that is providing much influence at this stage. It's been invalidated and we've already departed that zone. So I'm going to dim it down. I'll still have it there just in case something happens and we come back up toward either of the trend lines. We want to see it. And then from here, let's have a look. There we go. We are maintaining the rectangle at this point. You still haven't quit. Yeah, I haven't quit. Dude, were you expecting me to quit? Yeah, no, I have certainly haven't quit. So, no, I see. My job. Yeah, no. I need income. Yeah. I need to buy crypto somehow, right? Um, yeah, I should sell toe picks. Yeah. Um, so for now, look, the line is still there. The line is still in the sand. Monday, you know, this isn't always the case, but I feel that the stock market, Mondays tend to be kind of like a flush out. It's not every Monday. I'm just saying, on average, Mondays tend to have a corrective leg to them. Let me get the weekend indicator on. So actually, it might not show on this chart because this is the stock market and the stock market isn't open on the weekends. So let me open up the session breaks then. It's the best we can do. So let me put this in American mode. Let's go UTC -4 for New York, just so we can get the days. Okay. So we're calling that, this was the Friday activity within this column here. This was the Thursday. This was the Wednesday, and this was the Tuesday, and this was the Monday. So Friday, Thursday, Wednesday, Tuesday, Monday. Okay. I just want to see if there's like a theme happening. So there's a Friday, Thursday, Wednesday, Tuesday, Monday. I'm counting backwards here. Friday, Oh, okay, that would have been. Oh, hang on. There's a public holiday in here somewhere because it's going Thursday, Friday, Monday, Tuesday, Wednesday, Thursday, Monday, Tuesday, Wednesday, Thursday, Friday, Monday, Tuesday, Wednesday, Thursday, Friday. What's going on? Uh-huh. This Friday, there was no stock market session. This would have been like a public holiday, perhaps. The Friday there was no market. So we got Thursday, Wednesday, Tuesday, and then Monday. This was Friday, Thursday. Okay. We'll just use this section of the chart. So what I'm claiming is that Mondays are rough to start off. How many of them follow that trend? So we got Monday corrective move, Monday sideways at best. Monday corrective move, Monday sideways, and then Monday corrective move. So to pick out all the Mondays, I wonder if there's a Monday indicator. Maybe not. Mondays. No. Anyway, let me just scan over them. Oh, here's a good Monday. 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 Sideways. Monday down. Anyway, so let's see how Tuesday and Wednesday shape up. See if we can get a bounce. Does this thing deserve to bounce? Or does it deserve to pull back even more? Let's find out. Let me just delete all this squiggly, these scribbles. And I'll go back to the 4-hour chart, perhaps. Hey guys, is it really weird without the music? Is it strange? Or do you prefer it? Or maybe I can just continue streams in the future with no music. Maybe I could go on webcam and that'll replace the music. Okay. So let's go to the daily time frame. I just want to see if there's any kind of Fibonacci reasoning. Yeah, I just want all of the content to be me. I'm happy to try and make some basic music, just something ambient in the background to fill the the blank space. It's as calming as always. Okay, cool. So right now, from this point, we haven't even done a test of the 236 Fibonacci level. So that hasn't given us any kind of like reasoning to bounce. Is there any other stretch of this trend that you could measure as a Fibonacci? And maybe this pivot down here. So this is where it gets a bit tricky. This is where it becomes a little bit subjective as to what point you pick. It's like, okay, what low are you referring to here? Are you going here? Are you, because this is where people could probably start cherry picking, like, oh, but I want to pull it from here so that my my Fibonacci level hits. So I don't agree with that, but I think this would definitely be a leg that everyone can agree on. This is definitely an impulsive wave here on the S&P 500. It's a very obvious point of support and pivot. We pivoted definitely off that point. So I think starting a fib from there and tracing it upward is reasonable. Pulling it from here doesn't really make any sense because it's like, okay, you just ignored that whole first leg there. Maybe that is a smaller Fibonacci retracement that you could have measured on a smaller time frame, perhaps. Like maybe if you were pulling it from here and drawing it up to a local high, like, you know, over here or something, and that gave reason for the bounce off the 236 here, maybe. I don't know. This is where it gets a bit wishy-washy. This is a really good one. See how trend threw us all the way down to this extreme low, and then a trend took us all the way up to this extreme pivot up here, because it stands out. Like if you were to just smooth all of this out to just basic lines like that, to me, this is a pivot point, that's a pivot point, this is a pivot point, as was this, as was that, as was that, and probably this, right? These are all pivot points. This is where you do your Fibonacci retracements from. So I'm gonna take a retracement just to show you where this bounce here occurred. So even here, like if you're gonna use it with precision, it didn't actually find support off any fib level. It just bounced in the middle. So, well, what the hell's that line? It's not, it's maybe these previous resistances over here. That's as best as you could suggest, I think. But yeah, it's in the middle of nowhere, pretty much. Maybe this low is the wrong spot to pull it from. Maybe it's supposed to be from this low. And this is where you start cherry picking to go, okay, that point there, okay, this point. Because we've got, from a smaller perspective, like a smaller time frame, we've got pivots like this. So that leg there, that stretch there, was a golden pocket. I can see that that is a golden pocket. So it came into the golden pocket and found support and bounced off it. Anyway, let's go back to Bitcoin. I'm going to wrap this up in a couple of minutes. Is there any kind of Fibonacci situation going on here? Bitcoin, let's just do a rough one. I won't snap it onto any points, but we're bouncing, currently trying to use the 0.5 Fibonacci level as a bounce point. We did it here perfectly, and we're trying to do it here again. These were very deep pushes toward the 0.618. Let me just take a more grand retracement. This is back to the ETF sell-off low down here. We're coming in toward the 382 fib level. So the 382, it worked here. See, we didn't have this high. So you pretty much have to take all the examples after the high as the 382 test. And I would say this is almost touching the 382. So is this. This double bottom here, this 1, 2, is our last sort of line of defense before we get a broader correction, you know. Could we come down to this range here? We very well could. It's starting, every time we come down to the bottom of this rectangle, it's looking more and more like probable that we're going to visit down here, right? And every time we come up to test the top of the range, we feel a bit more optimistic, like we're going to break out. Like that's just the way the market works, and gets you anticipating the next part of the market. But look, trade supports as supports until they're not supports, if that makes sense. So this is just hypothetical. This is not advice. This is not any kind of like me telling you what to do. This is just an idea. What if you went long at support, right? Just like these times, if you went long at the support, it was profitable, right? it was profitable, well, momentarily as we went to the halfway point. So being a support, buying at support is not the stupidest thing. It's actually the suggested thing. It's like, you buy the dip and you sell the tip. Like, so when this finds its support at the dip, this could potentially be a buy. Now, the point of invalidation is close, very close by, because if you start getting activity that goes through, you can stop it out, you can cut it. Now, a safer way to take a long is to wait for confirmation of a support. Wait for a higher low and get in on the higher low. And then that has a stronger, like, it's a much safer spot to get in than trying to guess that we're going to find support here and then have to rely on your stop loss if you're wrong, So wait for the price to show you that it's using the bottom of the range as support. Don't try to front run it. So a buy here was more sensible than a buy over here. This one was a guess. This one was a more measured, a safer and more sensible entry because you had confirmation of a higher low. You got in, right? So I wouldn't advise just blindly longing a support like that. Wait for a pullback, or wait for candles to start closing above the support at least, so that you can get in with some level of confidence and assurance that is what's happening. And same with resistance. Don't short at resistance until you get evidence to do so. Like, this was a triple top, arguably maybe even a quadruple top. It's got a lot of touches, but we just could not get through that level. Third time, could not do it. This would have been a very high conviction short entry on this candle here. This one right here, that first red candle was very convincing, because not only was it a triple top, it was a bearish engulfing 4-hour candle. You could have taken an entry at the close of that candle short, and you would have been beautifully into all of that bottom side, that downside. So just as this one, look at this. You had a candle down here, and then you had a bullish engulfing candle. So this is the yin and the yang. This is the opposite. So you can enter knowing that, okay, we've come down and tested some level of support. We've got a bullish engulfing candle. There's reason for me to have some kind of hope. Maybe set the stop loss, below the wicks. See, look at this nasty candle here. Look at this wick here that would have stopped people with a very low tolerance stop loss. Would have been stopped before the rest of the move played out, right? So that was kind of not. That would have been tricky to hold along through that. But if you saw it for what it was, and you got in after getting stopped out again, then you would have been sweet. It's obviously hindsight's 2020. So what I'd be doing for foresight would be waiting for Bitcoin to come down and see how it treats this line here. We want to know, is it going to lose this support? If so, don't long it. Like, if anything, you could even short the break down. See, if it comes up and fails to re-enter, that's a short, because you've just lost a level of support. You've lost it, and it's now acting as resistance. So that's an idea for shorting, but wait for the price to show you. Wait for some candles to show you what is happening. If you start getting candles closing back into the back in after testing, that is like a decent, I would say, long confirmation. Like, confirming the long idea. And also, by the way, I still think, and a lot of people, and it should be evident, that the stock market influences cryptocurrency. There are days where where Bitcoin pulls away from the stock market influence, but at the moment, and for the most part, crypto follows the stock market, and the stock market fell out of here. It lost this support, and it's really testing. It's threatening to lose this support here. So there is a short term, or which could turn into a long term, but there's at least a correction underway at the moment, depending on the time frame that you're looking at. On a higher time frame, like let's go on the daily. Let's take off all the drawings momentarily. On the daily, the stock market doing this pullback here that we're in, that is nothing to be concerned of yet. The point of concern would be like losing older lines of support resistance. We've still got our all-time high line over here, this old all-time high, which produced resistance over here too. We have not back tested that yet, so maybe the S&P is going to come and back test that before carrying on, and that would still be part of an uptrend. Like the whole thing would still be an uptrend that has not broken. So that's what the high time frame gives you. We have come up so far that we've afforded so much room to retrace without killing the trend, if that makes sense. The higher you come up, the more you can afford to retrace before killing the trend. If you're playing it on a more sensitive time frame, like you're just playing the local swings, then you wouldn't be holding a long right now on the stock market. You'd be out, or you'd be short, and you'd be waiting for evidence of the next pivot, wherever that may be. Like if you get an inverse head and shoulders, for example, something like that, Let's just see what happens. All right, I better get ready for work. I don't want to be late. Thanks for tuning in. Subscribe, like the video if you haven't already, and I'll catch you on the next one. Peace.